Hello and welcome to the Weekly Forex Outlook at XM.com. US and UK inflation data will take center stage this week, while over in Australia, traders will be keeping an eye on employment data for October, as well as data out of China. I'm Maria Pachordes, and joining me to discuss all this is Senior Investment Analyst Haralambos Pissouros. So Haralambos, let's start in the US, where the economy remains quite resilient. We'll get CPI data for October on Tuesday. What are we likely to see there, and how might it impact the dollar and investors' bets for another Fed hike?
Hello, Maria. Yes, the U.S. economy grew at an astonishing 4.9 growth rate in the third quarter, and several Fed officials kept the door to further rate increases open due to that. Also, just yesterday, Fed Chair Powell said that they are not confident that rates are high enough to signal the end of the fight against inflation. Of course, this helped the dollar, but it is worth mentioning that investors remained largely unconvinced that another hike may be on the table. Currently, they are assigning only a 20% probability for one last 25 basis points increase, while they are pricing in around 85 basis points worth of rate cuts for next year. Now, with regards to next week's CPIs, considering that the PMIs for October suggested softer price pressures, the risks may be tilted to the downside. And with the year-over-year change in oil prices turning negative again, if the core rate continues to slide, then the headline rate is likely to fall by more. This could add credence to investors' belief of no more rate hikes by the Fed and perhaps hurt the dollar. However, as long as data relating to economic growth continues to suggest that the US economy is performing better than its major peers, any retreat in the dollar may just be a corrective phase, and this could be confirmed if Wednesday's retail sales and Thursday's industrial production for October continue to point to a resilient US economy.
Moving over to the UK now. Last week, the Bank of England kept rates steady, but signaled a willingness to raise rates if there are persistent inflationary pressures. The employment report for September comes out on Tuesday, and inflation numbers will be released on Wednesday. What are we expecting from this data, and how might it affect the pound?
Investors are not convinced that the Bank of England will hike again either, despite last week's hawkish halt by the bank. That said, this could change if wage growth on Tuesday and the CPI numbers on Wednesday suggest that inflation is stickier than previously thought. Yes, the employment report is for September and the CPI is for October, but elevated wage growth in September may translate into stickier inflation in the months to come. And even if investors don't add to their hike bets on signs of hotter than expected inflation, they could scale back some basis points worth of rate reductions for next year. Not because of a brighter economic outlook, but because of fears that cutting interest rates massively to support the economy may result in inflation getting out of control, which could result in deeper economic wounds down the road. This, combined with potentially cooler US inflation, could help GBP USD return above the key barrier of 123.10 and perhaps emerge above its 200-day moving average.
And finally, in Australia, the Aussie has been under pressure this week after the RBA's dovish hike and concerning economic developments in China. Chinese data is due out on Wednesday, and Australia's jobs numbers for October come out on Thursday. How might these figures impact the Aussie and the probability of another RBA hike in December?
Yes, the Aussie has been under pressure this week, and with the probability for a December hike being a coin toss, traders may seek clarity in Australia's employment report. Generally, labor conditions in Australia remain tight although the previous September report pointed to some cooling. Now, if next week's numbers point to strength, the probability for a December hike may increase and the Aussie could rebound. However, I believe that any recovery could stay limited and short-lived if the Chinese numbers released the previous day add to the woes to the concerns surrounding the world's second largest economy. Just to mention, on Wednesday, investors will have to digest China's industrial production, retail sales, and fixed asset investment, all for the month of October.
Harlamos, thanks so much. This was the Weekly Forex Outlook here at XM.com.